Technicals, you want to look at charts? Bada boom, bada boom.
Still overweighted in single stocks.
34.56. That's your power pick of the day.
Welcome. This is Power Trading Radio Live. Power Trading Radio Live, fueled by Online Trading Academy. For more information on the show, visit us online at powertradingradio.com. Now, here's your host, Merlin Rothfeld.
Hello, everybody. Welcome to Power Trading Radio. Merlin Rothfeld with you for a Thursday afternoon. Yep, it's Wealth Management Thursday again, so we're going to take a look at a very important segment of wealth management, I guess you could say. The dreaded tax man cometh, and the dreaded, no, not really dreaded, the lovely Michael Atias will be joining us here a little bit later on to talk about some of the areas of taxation that maybe you should be concerned with, or just issues with your own personal taxes. If you have questions, feel free to power blast us. We've got great questions incoming in from Ben, David, Howard, Carol, and if others of you have questions, power blast us out at powertradingradio.com, or you can go to Twitter. It's at Trader Merlin is the name there to send questions to, and we'll get to those on today's program. Well, we talked about getting to the all-time highs, not really the challenge. That kind of felt like a foregone conclusion the way the medias were talking. Now it's about 1,600, and today we were within just almost 2.5 points, 2.65 points away from all-time, well, it is all-time highs, but from 1,600 on the S&P 500. A pretty lofty level, and some of you may remember a couple days ago I was talking about the importance and significance of whole number psychology. Well, 1,600 for the S&P is going to be a pretty darn significant one. Here's what I think is going to happen. I think that this momentum that's going right now is starting to change more retail population's mind. They're thinking, gosh, I missed this. I wish I would have been on it. We had great earnings coming out today by a variety of different companies. So this is probably going to fuel it a little bit more. My guess is we'll probably get to about 1,620. And then we'll start to see things peter out and then start to roll over as the momentum starts to slow down. Obviously, a lot of it's fueled by the Fed. We know that. And the minutes, I don't know if you caught the fiasco the other day, but the Fed minutes were supposed to be released today. But they didn't quite release the minutes on time, did they? They actually leaked them to banks and brokers and politicians beforehand. I know this is actually fantastic. I know some of you guys got to read the headlines there going through Yahoo Finance, et cetera, about lobbyists, bankers, a lot of the big major institutions, about 150 different people on this email list, got all the Fed minutes. So that's almost like knowing when the starting bell or the whistle is going to blow, way before anybody else does. So really just adds to this whole inefficient market theory we talk about, how deceptive and one-sided these markets are. The Fed immediately went out and released it to the mainstream media after that. But these guys did have a bit of an advantage. And why is it so important? Because the Fed minutes may have leaked information about what the Fed is going to do going forward. We talk about the Fed minutes. We talk about the beige book. Those Fed numbers can be crucial with regards to telling us where these markets may be headed in the short term, intermediate, and long term. So that was something rather funny out there. I want to real quickly talk about a couple different questions out there. There was some dealing with taxes. Certainly we're going to get to the tax piece as we progress through today's show. But the markets overall have people totally confused, as you can tell by the way I just said that statement. TJ, let's bring up the S&P 500 here so we can see not the confusion, but the problem that we're running into, no pun intended, for the 1,600 mark. This is a daily chart of that S&P 500, and let's go back to a monthly, if you don't mind, TJ, and show me the long-term picture. There we go. Keep in mind these numbers are a little bit different because of what happened with time, but you can see that going back to 2007, we have now clearly ripped through that level, and our next major obstacle is going to be this 160 or 1,600 mark on the S&P. If we slice this down a little bit and look at the 5-minute chart, that really is another telling story. We haven't seen much weakness, although the first real sign of weakness happened on the second half of today's trading session. You notice that we really had a pretty strong uptrend going, and we could even draw in some trend lines here if you want, and we'll try to keep those about as honest as we can get. There's a nice little trend line we have going. But you notice the second half of this day, I'll put it in a little yellow box here. The second half of today was rather interesting. We had great earnings, yet the market still started to show a little miniature downtrend there in the last second. So my guess is if that trend line doesn't hold, we'll probably see it revisit that some lows right around 1540. So I think that we can have a little bit of a pullback here. If we don't break that 16, then it's just going to continue on to the downside. But I have this gut feeling, guys, that we are going to break it. On the day, the S&P 500 was still up. It was still a good day. It was up 0.36%, closing to 1,593. So, hey, not too shabby there. And that wasn't the best performer out there. Let's start with some of the laggards, though. We'll look at the Qs. NASDAQ 100, yesterday just had a phenomenal day. It was a huge day. Well, I say huge relative to recent history. We just had a great day yesterday for the NASDAQ market. Today really kind of flat and sideways, as you see that one there. Actually gapped down and just went sideways. And closing the day up for sure to 3,300, but it was only up less than 0.1%. So not a real great day. The bigger mover out there, diamonds, apparently was the bull's best friend today. Notice the difference between those two indexes I just pulled up. We had the NASDAQ gap down and just kind of went sideways. The Dow actually gapped up, but barely. Sold off for about 15 minutes and then rallied pretty sharply. So a little bit different, showing a lot more strength there, and that certainly may have something to do with the earnings statement that just came out. Now, earning announcements. We're in earnings season, folks. IWM, last one before we cut back here. IWM was up as well. It was up about 0.31% and nice little move to the upside, but it gave back a lot of it. You know, it really did give back a lot of that move from the second half of the trading session. And, you know, we started off the day with fairly good moves to the upside, and that was kind of caused by the European session. The European markets looking okay. The numbers weren't as bad as expected. Actually, kind of came in line with expectations. So European markets started off kind of to the upside, looking fairly decent, and then they teetered. They're going to be teetered tomorrow. You'll see that tomorrow. Watch tomorrow. All right, let's go to a question. Make sure I get to Dan's question about THC. Don't worry, we're not talking drugs on today's show. We're talking Tenet Healthcare. That's THC. Interesting. I think I actually added this to the Obama portfolio that we created, and you know, one of the things about THC is how it has just shot up lately. You're looking at Tenet Healthcare really doing. Why can't I type today? There we go. It has had a huge rally since the election. If we go all the way back to November when the election was going on, you can see. Let's put a vertical line there, TG, on where November was, right around in here. There you go. This is really where it kind of erupted, and that's once Obama passed and was reelected. You know, it shot up, and then all of a sudden you saw a pretty nice little shooting star here a few days ago, going all the way back to April 2nd, and then real sharp declines. Now, the question that came in from Dan, and I apologize, I just got this one, so I'm going to have to do it on the fly here. He's looking to go long at about 40.34. So I'll put a little cursor out there, about 40.30, a ballpark. I'm at 40.32. Stop loss at 39.90. So that's a really tight little, it's a tiny little stop loss. We'll have to zoom in on this bad boy. And a target of 43.49. So he's got this target 43.49, and you know this isn't going to work from this perspective. So what we'll have to do is switch it over to, let's say, an hourly chart and see if we can get all three of those lines in here, because there we go. Yeah, I like it. It's pretty good. I actually would probably. You had 99, 38, 38.90. I do like it. I was going to say it's a little too tight, but 39.90 is pretty darn good. And what he's doing is he's looking for this little area of supply or of demand that we saw happen on the 6th of March. So that's a pretty nice little area. And obviously, Dan, I'm assuming you know the odds enhancers, et cetera. So you have like a lot of real good arguments here that you would look at with the odds enhancers. The only unfortunate part is today. We had that really strong rally. It would have been great if it came right into that 40 range. The other piece on here that you didn't mention was that whole number psychology of 40. But a great buy point. So I like your map out here. I like the whole setup. I like the fact that we're in a big uptrend and you're looking for a correction, a pullback, and buying that correction during an uptrend. That's exactly what you're supposed to be doing. So great job there. Unfortunately, this is one we just didn't get. And kind of goes back to a question from Naveed. Naveed was saying, look, I really like the supply-demand stuff, but I'm just having troubles with the market. That's just the way it is, my friend. This trade that Dan was looking at here on THC, he had everything mapped out pretty darn good. I like his stop. I like his targets. I like the entry points. it just didn't get to his entry price. So unfortunately, that's something that we have to deal with, where it's just part of the markets. And you say you're struggling with the markets, and this market is a little tricky at this point in time. But don't worry, it'll all come back. Just keep your head up and know you're following the rules and doing the right thing. All right, let's do this. Let's take a quick break. When we come back, I've got a very special guest in the program. We're going to talk taxes. So for David and Howard and Carol and a couple others, I got some questions already lined up for Michael Atias. If you have a question regarding taxation, are you nervous, sweaty palms right now, worried that Uncle Sam's going to take more of your money? Let's see if we can find ways around that, or see if we can just make your filing better and more efficient for you. Power Blast your questions at powertradingradio.com. We'd love to hear from you. And don't forget, you have until tomorrow to midnight, really, Friday at midnight, to forecast what you think the spot price of gold will be by April 19th. And maybe I'll be announcing your name on this program to win a free gold coin on behalf of Power Trading Radio. We'll see you guys in just a couple minutes.
Welcome back to Power Trading Radio Live, and your host, Merlin Rothfeld, with today's special guest.
Welcome back to Power Trading Radio, everyone. Merlin Rothfeld is a very special guest, and it's not the tax man. It's actually someone that helps you deal with the tax man, which is a very important thing. My guest today is Michael Atias. Michael, welcome back to the program.
Thank you for having me.
It's getting down to that time of year where people get nervous, they get stressed out. Of course, you're probably a little bit stressed out because everyone's stressing you out.
Correct.
As people like myself waiting for that last-minute deadline. I'm going to start right off with some questions here. We've got a few questions coming in, which I think might actually just steer our conversation here today. Before I ask the question, is there anything that off the top of your head that you're seeing right now with your clients that is just real blatantly obvious that people should be aware of? Is there something that stands out as like, come on, people, you shouldn't do this?
Well, there's a few things. The number one thing I think that is very important is those who qualify as traders and securities and they want to make that mark-to-market election, oftentimes they make the mark-to-market election in the returns that they file, yet they forget to notify their broker that they've elected mark-to-market election, and then you get these statements with the wash sale rules.
Yeah.
And now it's very difficult to understand what actually the loss was, what was the cost basis, because when there's a wash sale rule, what the broker does is they take the wash sale that was disallowed and they add it to the new cost basis. So really the cost basis that you're reporting isn't the right one, because if you're not doing, if you're doing mark to market, then your cost basis does not have this additional wash sale attached to it. So that becomes hectic. So for all of you out there who want to make the mark to market election, first of all, you got 3 days. Basically Monday is your last day. And even if you're not ready to file your tax returns yet, you can, with the extension you sent, you can send the mark-to-market election. Second step will follow next year when you have to file Form 3115, change of accounting method. But right now you got to make that election, and then you have to notify your broker. So when some of my clients call their brokers to see if they can redo their statements, the answer was no, that the deadline or the cutoff is December 31st, because once they submit it to you, they submit it to the government, that's it. It's gone. They're not going to spend now hours of seeing what happened there and reissuing your statements.
And for the novice out there, I know we have a wide variety of listeners out there. Some know exactly what you're talking about. Others are probably going, you're washing things? Are you laundering money here? No.
Yes.
What is the wash sale rule for our listeners?
The wash sale rule really applies to those who trade equities. And we talk about equities, talk about stocks, talk about options. Most ETFs and most mutual funds will fall under that. Bonds as well will fall under that. Also, those who are trading index funds, like the SPYs and the Qs, those are not futures contracts. Don't get confused. Those are just like, basically, it's an ETF, so it's a security. So even though it's based on a broad-based index of more than 10 securities, it's still considered a security. Therefore, those wash sale rules apply. And how does it work? If you buy a security today at, say, $100, and you sell it 2 days later for $95. So normally you have $5, and you should be able to write that off as a loss. But if you bought that same security or an identical security within 30 days after, or you had bought the same security 30 days before, then that triggers the wash sale rule, which says that that loss is disallowed. You can write off that $5. What happens to it? It gets attached to the new cost basis. So let's say you bought 100, sold for 95, bought again.
I'm out $5. I'm negative 5.
Right. Then you bought it again at 92. Okay. So what would be your new cost base? Would be your 92, because what you paid for, plus the $5 that were disallowed. You add them together. Now you got 97.
Wow.
Okay. So let's say you sold it again for 92 and that was the last time you ever touched that security. Now that $5 triggers back in, right? Because you have cost-based 97 and sold it for 92.
So
you want to avoid those wash sale rules.
Yeah.
They're kind of annoying. And
Well,
they will increase your tax liability. Bottom line is it will make you pay more in taxes than you should.
Oh, well, I think we're all really excited to go pay more taxes because we all know it's going to such excellent causes and really going to strengthen America and make it a better place. My nose is growing, if that's possible. To me, the wash sale rule really, for somebody who's a long-term investor and making, a trade every 3 or 4 months, who cares? It's no big deal.
No
Someone
big
like
deal.
myself who's out there saying, hey, you know what, 1 week I might make 15 trades, another week I might make 4 or 5. It's active, and I might trade the same thing. Therefore, it's important for me.
Correct, right. If you're an active trader and you trade similar securities all the time, and that's what most of the active traders, that's what they do.
Mm-hmm.
They will trade Apple, for
Nonstop.
Nonstop. And then they'll go to, Finisar, and then they'll go into Netflix, and they'll go to something else, whatever it is, Google, and they'll trade those stocks like repeatedly because they like these stocks, they know them.
Right, we know them, yeah.
They're not always profitable with them, but some people are just
I'll
in
get
love
it
with
back this
Apple.
next
They
trade.
lose 50 grand on them. Like, what do you love about it so much? It loses you money.
But it's Apple.
But they're trying to make money
I know.
in that specific stock,
Right.
So
it's funny. In my early days, that's exactly what I did. I would trade one stock. I would trade it every single day. I'd make upwards of 500 trades a day on one stock. And a lot of listeners go, "What the heck is he talking about?" That's just what I did back then. Nowadays, obviously, I'm much more calm and collected. But a lot of people feel that they do understand a security and build a familiarity with it. Something interesting that he just pointed out. He says, I've got some clients that lost 50 grand on Apple or whatever stock it may
Or
be,
more.
or more. Honestly, if you're hearing that, look at your own trading. And this is not non-tax related. This is what I call the stupidity index, and I was a victim of it. If you're trading something and it's consistently taking money out of your account and you're losing more and more and more, either stop trading that security or go to a tattoo artist and get the word toe dye tattooed on your forehead. That way, when you look in the mirror, you can read the word idiot. Because if you're trading something that's continually taking money out of your account, it's not working. Move on. And it took me a long time at the beginning to figure this out. I was that idiot.
I have a friend who's a very, very good attorney, known attorney, and he told me this once in a conversation I had with him. He said, my tennis teacher taught me this. He said, if you're playing one serve and you lose, second serve you lose 2, 3 games in a row doing the same thing, you got to change. Doesn't matter what you do. You think your serve is awesome, your backhand is great, your forehand is wonderful, but you're losing games.
Yeah.
So you got to change something about that. You can't keep doing the same thing. It's called insanity, or you call it
Well,
stupidity.
and the tough part is, I just think that people we're stupid sometimes. We get caught up in this media hype that Apple this, Apple that, amazing stuff. Went from $4 to $700 and change, and instinctively people go, I have to get a part of this. I can't miss it.
They want to say, I also made money in Apple. And,
Right.
and really, if you want to be a trader or any business, you can't just focus on one element. It's like, in sports. You can't just say, I'm just going to have a jump shot and be the best player in the world. You have to have other things going on with that. Otherwise, you're one-dimensional.
Yeah.
And if you're one-dimensional in sports, they know how to cover you.
Unless you're Steve Kerr of the Chicago Bulls.
And that's your job. Okay, fine. But, if somebody finds a niche where they trade one stock in the opposite and they make a lot of money on that, stick with that. There's nothing wrong with that. Do Apple all day long.
And who cares if it's not glamorous? It could be the dumbest stock you've ever heard of, and nobody cares.
If you
and
got
you're
that
making
number
money,
down, yeah. You got it numbered down. That's great.
keep calling it. All right. We come back. I want to get to a question from David regarding extensions. We've got a great topic on 1256 contracts. Some of you want to know more about that. So, Howard, we'll get to your question after a quick break. My guest today is Michael Atias of OTA Tax Pros. So if you have questions regarding taxation, now's the time. We'll also give you a little bit of update on his taxation class if you really want to get more involved with planning your personal finances and even long-term stuff and getting your trusts, et cetera, set up. We can always answer those questions here at PowerTradingRadio.com. So Power Blast us. We'll be right back after a short break.
You've been listening to Power Trading Radio, live, fueled by Online Trading Academy. To learn more, visit us online at PowerTradingRadio.com.
Welcome back to Power Trading Radio, everyone. Merlin Rothfelder with Michael Atias, talking taxation as we have wind down to our last few days. Of course, you guys know the April 15th deadline for most of you, unless you're filing extensions. Let's start with that one.
Yes.
David on El Paso, Texas. It's an interesting question. We always hear about, don't worry, file an extension. He says, if I file an extension, am I more likely to get audited?
First of all, I'd like to tell everyone out there, if you don't have all of your information yet, you don't need to stress out to file on the 15th. There's no prize that you get if you file on the 15th.
We should, though. It would be kind of nice if we got a prize.
Yes. It puts a lot of pressure on us, of course. But you have to remember that the IRS gives you this automatic, it's called automatic extension, which is a 5 or 6 month extension depending on what kind of return you're filing. If it's an individual return, 6 months. If it's a corporate return, 5 months. So LLCs, S Corps will be due September 15th and individual October. Now, so that's first things first. You always want to do an accurate return and file it a little bit later than to file an inaccurate return and then get notices from the IRS or potentially get audited. That will cost you a lot of money, heartache, all that kind of stuff. You don't want to do that. Now, to the actual question you asked, if that's going to put him at a risk, statistics doesn't really show either way if there's a higher percentage of being audited or lower percentage of being audited if you file after the extension deadline, after the original deadline or before that.
Because it would almost seem like, from an IRS perspective, I would, if I'm an auditor, and this may be just me being, maybe it's why I'm not an auditor, because I would think, the people who are filing extensions, the ones that don't have their crap together, and maybe they're the ones I'm going to get more luck with.
So that's when you start doing speculations. Like investments, when you want to buy oil, saying, oh, you know what, I think there's going to be a nuclear strike on Iran, and then maybe this will happen, so I'm going to buy oil. And you don't look at the chart, you start suggesting we just reached a supply zone, this thing is going to drop like a rock, And they say, oh, I don't understand what happened. Well, that's because you're trying to speculate.
I got you.
Now, if you were right in speculation, guess what? You're going to be very rich because if that happens, yeah, oil is going to go to $250 a barrel, but that's speculation.
Right.
So again, this thing is it's your idea or his idea of what will happen. Some say, listen, the IRS is more likely to audit you if you file earlier or if you file later. Like I said, there's no conclusive evidence either way. Okay. I think, like I said, the most important thing is to file an accurate return. It doesn't matter if you file it earlier or later.
So there you go. For those of you that are stressing out, because I know that many people are, make sure that you file your extension so you don't get caught in that high stress moment and get really in trouble. Now, this is an interesting one from Carol. I fell into this side early on when I first got started, which is, withholding. And, do you declare a 0, declare a 1, or whatever you want to declare? Carol says, I currently don't do any withholding, and I'm always forking out money come tax time. Sorry about that, Carol. She says, other than possibly getting a return, what are the other advantages of taking a withholding?
The other advantage is, of course, that you don't pay any penalties and interest because there's a certain threshold that if you owe above that, and I think it's over $1,000, then they start charging you interest and what's called underpayment penalty. Now, for some people, actually pays off not to pay. I mean, I've got clients that owe $50,000 or $60,000, and the underpayment penalty is about $1,000. So they're looking at it this way: I get pretty much a free interest loan from the government because it only cost me $1,000 on 60. What is that? It's like nothing. It's like a couple of 2% or less. And I don't have to apply for this loan. I don't care what my credit is.
Interesting way of looking at it.
And if you're trading, it's even better. If you're a successful trader and you've got that extra $50,000, guess what? Can you make 20% of it a year? You should be. I mean, it's like, is that reasonable to make? Right, so 20% of that 60K is what, 12 grand? So you paid $1,000. It's called the cost of doing business. Of course, I, as an enrolled agent, cannot recommend you to do that. If somebody asks me what to do, officially I recommend to make the estimated tax payments, to have the withholdings, so you don't owe any money to the government. But in reality, it sometimes makes sense not to pay. I mean, the IRS is not going to throw you to jail and throw away the key.
Now I hate it because every time you come on here, you create some new thing for me to think about because I do
That's
withhold.
my job.
I know. Well, I do withhold, and the reason for me, Carol, is I used to be the guy who forked out a bunch of money at the end of the year, and now I'm like, you know what, I would rather pay it up front, take a little bit less money now, and when tax time comes, know that I'm going to get a nice chunk of change back. It's a bonus for me.
And that's okay. That's already a psychological thing. I have clients that every year they like to get a refund, and when they don't get a refund, they go, what? I don't get a refund? Because they bank on this money. They usually pay off some credit card debt, or they do a vacation, or they fund their IRA account. So really, let's not fool ourselves. Let's be adults, okay? And no,
if you
I make
yourself,
$100,000. I'm going to pay 20 grand in taxes or whatever it is. I got this expense and that expense, and I leave what I need to leave. Now, some people, like I said, like you, want to have a peace of mind. Say, hey, all my taxes are paid. I'm not worried about it. Come tax time, my account and my stuff. You do my return, great. If I get a little bit of money back, great. If I owe a little bit of money, not a problem. When you talk to people and they say, I just met yesterday a lady that she doesn't make a lot of money. She's, whether it's maybe $30,000, but it's all on 1099. So it means she's got to pay her own self-employment tax. And guess what? It's about $3,000. You should have seen the look on her face. She almost collapsed, because she didn't have the money.
Yeah.
So I told her, listen, you do the old school. Is everybody talks about this. You first pay yourself. Meaning you get that $3,000, you take 10, 15, 20%, put it aside. Mm-hmm. That's going to cover your tax bill. It's going to cover anything else you need. And then you're not worried about it. Yeah. You don't wait till,
that's where I'm at. And, I've seen people struggle that last minute, like, oh, crap, I have to come up with $3,000.
Because they spent it already. That's the problem.
If you've got poor financial discipline, then I would say withhold.
Then they're upset with their accountant and say, how come I owe so much money? I said, listen, we didn't make you owe this money. You didn't pay anything.
There you go. So there you go, Carol. For me personally, I would say do withholding and just pretend like that money doesn't even exist. That way, every time you file, it's like, oh, right, nice, a nice little bonus check, and then it's a little better surprise than having to dig and scrounge up money to pay your bills. All right, when we come back, I've got a question regarding 1256 contracts. We'll also talk about the tax class that Michael is teaching. It's all online, right?
The class is online, yes.
Okay. Again, if you have questions for Michael Atias or myself, Power Blast is out at powertradingradio.com. We'd love to get your questions in the program. And don't forget, you have until midnight on Friday to forecast what you think the spot price of gold will be on April 19th. If you're the closest without going over, I'll be giving you a free gold coin at powertradingradio.com. We'll be right back.
This is Power Trading Radio Live. Real people, real money, real trades. Visit us online at powertradingradio.com.
Welcome back to Power Trading Radio, everyone. Talking taxes as the tax man is knocking on your door for April 15th. I got someone to help you with that, tax man. To my left over here, Michael Atias from OTA Tax Pros. Welcome back.
Thank you.
Got a couple real good questions, and I'm going to start with one from Ben. Says he started class in August of 2012 with Online Trading Academy. So congratulations for that journey there, Ben. He says if he establishes an entity now, can he write off some of the OTA costs as a training expense associated with the business, or is it too late?
It's never too late, first of all.
Never?
Well, not for some things. It's too late, but
just want to make sure.
But first of all, when we approach this kind of discussion, we need to know more information about the client, the taxpayer. What are they doing? What kind of style of trading they have to see if they qualify as trader in securities. Mm-hmm. And if they do, then one of the best options is to go ahead and structure that LLC or corporation, whatever it fits that specific individual. Now, going back to education. Education is a tricky subject because generally the IRS says that any education that leads to a new profession is not permissible as a deduction. And so theoretically you can say, what do you do right now? You're an engineer, you're an investor, what are you? You're not a trader. Okay, so you're trying to become a trader and the IRS can disallow it. However, we take an approach that is slightly different and we say that this trading is really more of like a market research, of coaching. It's not like official education in the sense that this is a school and there's professors and all that kind of stuff. And some of the packages that we have involve, like for example, let's say when you have XLT. It's more of a membership thing than anything. I mean, it's for life. Mm-hmm. Same thing with the mastermind. It's the same thing. It's like a club. It's a small club. You get into it, and you have a membership for life, and it's usable for life, and it interchanges. ProPix is like a newsletter, really.
Right.
So those type of things that we say, we take that approach and say, hey, you can probably capitalize that cost and write it off over a period of time. We do ask it to be we recommend it to be within 6 months, so we can convince the IRS of our position. And even then, we can amortize it over a period of time. We can't take the full $15,000 or $20,000 you spent, because at the time that you were taking the education, you were probably an investor, and that's a directly related expense, so therefore you can't write it off.
Wouldn't a loophole, because I know a lot of businesses out there are sending their employees for personal enrichment things and go here and take a course on Salesforce or Excel. Those are write-offs, and in essence, this is the same thing. It's helping.
It's similar, but the difference is that when you own your own corporation, the rules are a little bit different. See, if I right now own a corporation and send you out to something, what interest do I have? Are you my brother? Are you my son? Maybe you are. I don't know.
Easy.
Are you?
Easy, Tiger.
We don't know, right? So therefore, there's no direct benefit to me. But when I own the company and I go and take a class about something, well, I benefit myself. So what? Tomorrow I'm going to show a study that shows that if you ride horses, your self-esteem goes up, blah 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 blah, and your sales ability goes up to this thing. So what?
Nolan.
Now we're gonna
Now I know why Nolan
Now
has
you know why
horses.
Nolan. So what? We're going to send everybody now to horseback riding. If I do that and try to write back that off on my return, I was going to say, listen, you like to ride horses. That's the end of it. It's your hobby. You can't expense your hobbies. Now you have to show something that's real. Now there are things that you can that they're like borderline. Like there's courses like you say Landmark and things like that. They do help people. Self-help, all those self-help classes, they do help. But the IRS sometimes treated that as personal expense rather than because you can't really tie it to the bottom line. It's not like you paid an advertising agency. You can
so bottom line is be selective about what you write off, and there are ways around it.
But there are ways around it, right? Yeah, but we really need to know like the level of trading that you're doing to determine the answer.
And I've had friends in the past here, Ben, who I would say have gone overboard, where they rent out rooms in their house. The hallway leading to that room is written off. The bathroom in the house is written off. They buy big screen TVs in their house, and it's supposed to be for the office. There are some areas where you could get in a bit of trouble, but there are a lot of things that you can write off. That's for sure. And the second part of his question, which dives into another question, talks about tax advantages of spot FX. So versus filing it as trading as an individual or trading as a corporation. And obviously, trading as a corporation, you have tremendous advantages over trading as an individual.
Correct. First of all, with spot forex, you have to understand that spot forex categorizes itself under section IRC 988, which means ordinary income. So there's a big benefit there. If you're just trading equities and you lose, how much money can you write off a year? $3,000. That's it. If you're trading forex, you can actually write off all the amount because it's ordinary income. We just did a return for a lady that she went up to work with somebody up north and they didn't know whatever they were doing. And by the way, she got audited. She got out of it somehow. I don't know how, but she did. She played that she was an idiot, and
Did she have a tattoo?
Yeah, she said, I don't know, and then probably they let it go. But we spot a mistake that her accountant wrote $50,000. She had $52,000 or so losses in forex, in spot forex, and he claimed it on Schedule D. So he really disserviced her because she only can write off $3,000. We're going to amend her return and claim that on the right portion, and she's going to be able to claim $50,000. Her tax bracket. About $20,000 of savings. So, you have to know how to do it. So there's that element of trading spot forex. Now, if you make money, you can try to opt out of Section 988 into Section 1256, which will give you the same 60-40 split on 1256 contracts.
And look, that leads right to Howard's question, which is he's probably heard me before talk about this, or you and I talk about it. He says, you make a big deal out of 1256 contracts. Does it really have that much of an impact on your taxes? Abso-freaking-lutely it does.
Yes, the answer is a resounding yes, because when you're trading futures, the biggest benefit you have is that 60-40 split. Okay, so just to give you an idea, if you're trading futures, you can make up to $85,000 a year. I think if you're filing married, you'll be paying about less than $2,000 in taxes. Do you understand? If you and I now take a full-time job, working in any place and make $85,000, we'll probably pay about $12,000, $15,000, $18,000 worth of federal taxes, and then on top of that, the state that you live in California, it's about $90,000. I'm joking, but it feels like you're paying all of your salary in the California. So, so that being said, yes, there is a huge benefit of trading futures. Now, let's say you're high time, your high bracket. Okay, we have some doctors that make over $500,000. So they're at the top bracket. They're paying 35% for 2012. In 2013, it's going to be actually 39.6, so it goes even higher. And also the state of California specifically raised out its highest tax bracket to 12.3. So we're talking about massive taxes for we can call them rich, I guess. And for them, it's going to be a substantial difference because if they trade anything else that is equities or options or whatnot, they're going to pay that 39.6% federally. But if they do futures, they're going to pay a blended rate of 60-40, which on their bracket will come to just around 23%. So I don't know about you, but 17% of savings sounds big. Let's say you just made $50,000 for the year. How much is that?
Absolutely. No,
$8,500.
It's funny because we talk about with proactive investing the principles of just saving 1 or 2% per year could add up to huge amounts of money later on when nearing retirement. Imagine 17% per year.
We're talking about hundreds of thousands or millions, actually, and I'm not exaggerating.
No, we know.
that's how it works.
All right, so there's your 1256 contracts. And I'm actually at your website. Normally I direct people here because you have, a couple-hour workshops for free, but I noticed nothing's going on, probably because you're so busy right now.
We're so busy that we did not even have the time to schedule these webinars. We had one last week, I think, and it was just really disruptive to our process of, completing these tax returns. So we're going to resume that. Probably there's going to be one in a few weeks, but in the meantime, what I recommend is, set up a consultation with us. That's one option. It's probably the easiest way to start working with us, or take our class. Our class is great. It's on internet, 3 days consecutively, 2.5 hours a day. We talk about everything under the sun. We ask all your questions, and you get the consultation with that. And we conduct that class at least once a month. So that's the best benefit, I think, to have.
There you
and
go.
It's complete write-off, by the way. You can write it all off. So, we made sure that you can write it off.
There you go. So for those of you out there stressing, don't worry. Tax time is right around the corner. But as Michael says, make sure you file the right return as opposed to the wrong return, and do it on time. Better file an extension. Do it the right way. If you want any help with that, you can always contact Michael's team. It's at OTATaxPros.com. The phone number to call is 855-682-7767. If you have any questions for Michael and his team, again, that's 855-682-7767. Michael, thanks for being on the program. I wish you a very relaxing weekend, because I'm sure that's not going to happen.
It's not going to happen, but I appreciate that.
No problem. Well, hopefully we'll see you again in a month or two with some classes going on. Again, if you guys have any last-minute questions, powerblast at thepowertradingradio.com. When I come back, all your economic news for tomorrow's trading session. We'll be right back.
Power Trading Radio Live is back with a look at what lies ahead for the next trading day and today's Power Pick.
Hello, everybody. Welcome back to Power Trading Radio. I'm Merlin Rothfeld, wrapping up your Thursday afternoon edition and the depressing topic of taxes. I know for some of you, you're like, oh, God, I don't want to do it. It's really not that bad as long as you plan ahead. And, we had Michael on 2 or 3 times last year really stressing that point about planning. Just like we'd plan out any trade, you should be planning out your taxes and putting those steps in motion so that you can make sure that when this day comes, there's actually a little bit of money in the account, and not just some money, but more money than you would have had normally if you're going to some H&R Block type of program, because they don't really understand traders' taxation. Now, if you had any questions regarding taxes, you want some help from Michael and his team at OTA Tax Pros, just go to OTATaxPros.com and they'll get you scored away there. Let's look at our economic calendar for tomorrow. Today's Thursday, so tomorrow's Friday. I made a mistake. I actually wrote the schedule for Monday's trading session. Maybe I'm just really excited about the weekend coming. So let me just real quickly get you your economic announcements here. For Friday's trading session, if you're trading the euro, you have industrial production numbers coming out, as well as the Euro Group meeting. So that will be probably the more important piece for those of you trading the euro. If you're trading the U.S. dollar, we have retail sales and PPI numbers coming out. Obviously, very important, the retail sales numbers. I'm guessing are going to be pretty good because of what's gone on today with some of the retailers, Ross stores, et cetera, doing very, very well. If you're trading, let's see what else we got. That's pretty much it. U.S. dollar has University of Michigan Consumer Sentiment and inflation expectations, as well as Bernanke speaking at about 12:30 in the afternoon. So that'll be an important one as well. As far as guests go, John O'Donnell, the weekend ambassador, the ambassador of opportunity, will be joining us for Friday's session. Also, Jim Hooplava, I'm pretty sure we've got him lined up for tomorrow's show. A lot of great topics, talking about supply and demand, and a few other interesting macroeconomic topics. And, of course, next week we've got Marty Dim, John Kicklighter, and Tilly Owls, so make sure you tune in for that. And don't forget, you have until Friday. Tell your family, tell your friends, until tomorrow at midnight to forecast what you think the spot price of gold will be by April 19th. And if you're the closest without going over, I'm going to give you a nice, shiny, new 1/10 of an ounce of gold coin on behalf of Power Trading Radio. We'll see you guys tomorrow. Take care.